I'm honored to welcome you all to the 4th annual Ripple SWELL Global. The financial industry hasn't experienced innovation like this for decades. In the span of a few short years, the payments landscape has changed dramatically. Digital banks and PSPs are putting pressure on incumbents, cash is losing its footing, mobile wallets are continuing their meteoric rise. We have the opportunity to build a new global financial system together, for all. I think we all agree no one achieves anything by themselves, and I'm incredibly grateful to everyone for being here as we continue to build the Internet of Value together.
Have expertise, but to sort of give light to what angle you sort of tackled this CBDC question from. So maybe David, we'll start with you. Maybe you can give us a quick introduction and a little bit of background about yourself, and particularly with your work over at the Fed.
Sure, thanks, Chris. And so my name is David Mills. I'm an officer in the Payments Division at the Federal Reserve Board in Washington. And I have background as a research economist. My background was in monetary theory, and I asked very foundational questions in my old days around why money exists and for what purposes. So not surprisingly, this got me very interested and curious about future innovations around money and the future of money. And so here I am looking at central bank digital currencies for the Fed. I have responsibilities for our economic research team in the Federal Reserve Board for the area of payments, as well as our retail payments function and the broad innovations portfolio that we have in payments. And so central bank digital currency is at the heart of that.
Wow. And well, any time in which you can actually think about money, you know, it's fascinating because it's not just a historical question anymore. It's as much of a political science or in a current events sort of story, as we'll get into shortly. And Ulrich, maybe you can talk to us about your work in payments over at the ECB.
Yeah. Hi, Chris. Good afternoon from Frankfurt. Thanks for inviting me. And yeah, I've been in the European Central Bank since '99, since the beginning. I spent 20 years in, almost 20 years in market operations and risk management. And then I moved only 1 year ago into market infrastructure and payments. I mean, I'm also an economist by training, but I always worked then on the operations side of central banking. And yeah, now very excited to have CBDC as extra topic. I mean, the department I work in also, you know, runs the RTGS system for the euro area. We run T2S, the security settlement system for the euro area. So we have quite big operations that keep me busy. If CBDC is added to that, it gets a big portfolio.
That is really quite a portfolio. It's like a real-time gross settlement, and you know, in my spare time, I might as well think about the future of the of what money will look like. I guess we'll start off from really the question that everybody wants to know, and that everyone's always asking. You know, whenever you get into the CBDC conversation, which is how close are we to a CBDC? Now, obviously, that in and of itself implies that we know just what a CBDC is and exactly what are the kinds of features that a CBDC has. But just to get that question out of the way, I think maybe we'll start with just a sense as to, however defined, you know, how close are we getting, and do you see steps in the international regulatory and monetary community towards sort of inching towards a first CBDC product of note and of global relevance? Ulrich, I'll start with you.
Sure. Okay. No, I mean, you can read in the press some countries are more advanced than others. So very diverse, you know, monetary areas like the Bahamas or China, you know, are close to issuance CBDC. So that's interesting that it's really, you know, a worldwide phenomenon and a bit independent of where the economies or how the financial systems look like. It's a very democratic, you could say, technology in the sense it can be started everywhere. And let's say the big advanced economies like also the euro area are lagging behind those. And maybe one reason for why we have been lagging behind is that electronic payments was not so advanced in the euro area as it has been elsewhere. So people were quite conservative in their payment habits. But I talk about the past. Yeah, indeed, there's a strong trend, of course, and therefore we are joining the train and looking at scenarios and started to work. At least we have published a report now where we say what the scenarios are and what the questions are we have to address.
And David, I mean, Ulrich made a couple of, or made some very interesting observations there. Number one, that it's really something, a CBDC is something that is a kind of a democratic project. I mean, you have countries with very different sizes of GDPs and economies sort of tinkering with and thinking about the implementation of a CBDC, with some countries sort of taking their time a bit more than others. What's your sense of the global state of CBDCs, and how close do you think the United States and other major economies are moving? And do you have any sense as to why some countries or economies and jurisdictions are moving faster relative to others?
Sure. So first, I would agree with Ulrich's sentiments here about the diversity of paths, some of the speed at which different central banks are taking. And I would say that a lot of the areas that where we observe central banks being very forward-leaning in this space are often in a place of need for improvements more broadly in financial infrastructure. So we see a number of countries where they're motivated by a large degree of financial frictions, and they're trying to leapfrog certain types of technologies, I think, to modernize their broader payments and financial ecosystem, I think is one of the observations that I see. I think another sort of question or use case might be just around how to reach different types of people. There's a lot of financial inclusion types of arguments for particularly certain types of emerging market economies where, again, the broader digital payments ecosystem is not necessarily reaching individuals in a very efficient way. So there's a lot of these opportunities in some of those types of countries. I'd say for more developed economies like the Euro area or the United States and other parts of, let's say, the G7 community, there's a lot of interest and focus on this technology as a new innovation on top of existing modernization efforts. So but the ECB has a fast payments platform. The United States is building out a fast payments platform. And so a lot of what we're trying to think a bit about is how does this fit in on top of existing frameworks and services that we have already, and how do we sort of expand the reach within those bounds and beyond those bounds as sort of a next step. So our sort of starting point, I think, is a little different in the sense that we do have a pretty robust electronic payments ecosystem, and we do have a lot of alternative ways to pay today electronically, and we do have a large portion of folks that have access to financial services electronically, but we do recognize that there is an important segment of the population that's not, and so that's part of what we tend to think a little bit about is there ways to reach that segment who are very cash heavy as a way to think a little bit about providing electronic access to the payment system through other channels that may not be readily available because they aren't necessarily banked or they're underbanked. So that's part of, I think part of the framing is to think a little bit about where are the frictions in our own jurisdictions, and how does this complement and remove some of those frictions and complement existing payments architectures.
That is a really interesting take. So often when you hear the conversation of CBDCs, it's in the context of a sort of a CBDC sort of digital infrastructure, possibly disintermediating legacy infrastructures altogether. And what you're observing, this idea of a CBDC architecture either supplementing or even being built on top of either existing rails or maybe strategies, perhaps. in order to achieve a wider array of policy outcomes. Ulrich, you know, when you look at the ECB has been slow, but now it's picking up steam a little bit. I mean, the ECB had recently published a task force report on a digital euro. You know, in the context of what we've heard held to issue a digital euro, certainly the question of being banked or unbanked or underbanked in the European Union is a different kind of a question, perhaps than what one would ask in the United States, in terms of whether or not that's sort of a major policy outcome or objective, as compared to other kinds of frictions in the payments ecosystem, whether or not it be B2B sort of transactions or obviously individual transactions where people are just trying to move their money around, and the challenges, everything from correspondent banking outside the European Union to within the Eurozone. But what do you think are the kinds of drivers that could push the ECB to accelerate its own work in this space?
Yeah, I think the most obvious one is the declining use of cash. And again, here the euro area is behind overall other nations. The euro area is also heterogeneous on everything, so also on payment habits. There are some countries who have moved into having a majority of point-of-sale payments now electronically, like the Dutch, I think, and the Baltics and Finland. Others are still mainly cash-based. But the trend is clear everywhere. It has accelerated. So there's a scenario where, let's say, the usability or popularity of cash payment really declines to an extent that you know, it would switch to a new kind of equilibrium, where what we have observed in other countries, where really electronic becomes a standard. And for that, we want to be prepared. Maybe also because the trend in electronic payments has been one where the European industry has not, let's say, performed so far so well. So, for example, in card schemes, there have been some European card schemes who some national European card schemes who have lost market share. So we are quite dominated by a few companies who are all not German companies, European companies, sorry. And that's no problem per se, of course. Those are very strong companies who have contributed a lot to efficient electronic payments. But there's a bit the feeling also of monetary sovereignty being at stake. If, let's say, payment is electronic payment predominates to that extent, and banknotes, which is a ECB product, if you want, are no longer used. So there, you know, we would say we close a gap by continuing providing central bank money as a fallback solution to citizens. And you could really say, you know, banknotes is the same technology apart from security features as it had 200 years ago. I mean, the whole electronic space has moved tremendously. And of course, users also follow, you know, this progress, and through biometrics and so on. Payments have been so convenient, electronic payments, that you could say it's a matter of evolution of central banking to offer bank money to everyone in a modern form, which has, you know, taken up the technological progress of the last decades. It would be more of a revolution to not do so, because it would be create for the first time again after 100, 200, I don't know how many years, a situation where central bank money would no longer be usable for citizens. So I think that's a bit the main scenario we have in mind.
Yeah, that's really telling. The declining use of cash and really sort of the sociological meaning of what cash means for society is really something that kind of depends on where you are, and the conversation about what cash means, whether or not cash is good or useful, or whether or not is a stumbling block for financial and economic inclusion and access. Really, it's very interesting when you sort of compare and contrast. You know,
Chris, can I add one thing? Just one small thing I forgot to say. Of course, the ECB and I think all other central banks are in the same direction, that banknotes will be continued to be issued, you know, indefinitely. No, there's no wish to substitute, because banknotes have their contribution to financial inclusion as well. You know, it's a means of payment, can be used offline and so on. So there's no idea whatsoever to substitute banknotes. It's more the problem that banknotes may become less usable even if we issue them. You know, we had this disparity of stocks of banknotes go up, but use of banknotes goes down. No, so it could be that banknotes will still be held for various purposes, but you cannot go to a shop any longer to pay with them. So we will continue to issue banknotes.
Right, and with the digitization and COVID, it's sort of accelerating that. But one quick thing before we switch to David, because I did want to get a take that we hear in the United States, and I was curious to get your take from the ECB's perspective, is that one of the other drivers besides cash in the United States, there is a sort of geopolitical conversation. And this conversation being, well, if you see a lot of work being done by the PBOC, or, you know, in particular by China, you know, that could be a game changer depending on, you know, how it can impact the internationalization of the renminbi or the attractiveness of the currency or the like. You know, are those kinds of conversations that you hear in Frankfurt or in your sort of affiliated office over in Brussels?
Should I start? Yeah. Yeah. Okay. No, I mean, indeed, as I mentioned, you know, the European payment markets, retail payment markets, have been dominated more and more, not by Chinese companies, but by very successful American companies, which is fine, you know, to the extent that competition continues to be sufficient. And now, you know, there are further firms which may, you know, enter this market, or foreign CBDC, as you say. So from that perspective, yes, it has been seen as an issue of monetary sovereignty to have some, you know, some market share remaining for European payment solutions, not a predominant share necessarily, but a sufficient share. And here CBDC could play a role, and the international role of currencies could play in the future role. I mean, it's not that that this is, you know, now on top of our mind, that there can be, you know, foreign CBDCs will be used and will crowd out, you know, the international role of the euro quickly. But it's more a long-term thing. That indeed, if this is a trend, then it would be good also to have a euro CBDC out there to compete, you know, for the benefit of the users also in the international space.
Yeah, you know, David, you know, this question, you know, of on the one hand, you have the habits of the users of money. I mean, you know, money is itself a kind of a consumer-facing product, and you see, well, you know, people are sort of shifting their habits, particularly in a pandemic era, away from cash. You also then have, as you know, in the United States, conversation about the competitiveness of the dollar in a world where China decides to digitize its currency. And then you have stacked on top of that a kind of a regulatory conversation, right? About, well, you know, how exactly would you even start to build out a CBDC? And we have lots of different ways of doing so. Although it's not, you know, here domestically, we have very clear, you know, sort of innovation programs at some of the market regulatory bodies. What does innovation look like? What's the process of innovating at the Fed? Where does it play out? I mean, I know the Boston Fed regionally has been trying to get involved with some things with MIT and the like, but how does innovation, like a CBDC question, play itself out at the Fed? And how does that then impact sort of regulatory stances?
Sure. So I think a couple of things. I mean, one is maybe just starting with a little bit of a sense of approach. And we talked a little bit about similarly that this is not meant to replace cash, but complement cash. I think on the same end, it's not meant to replace bank deposits, but again, also be a complementary type of instrument. So if we sort of think a bit about this, right, we're kind of working within these two bounds of not removing cash, not removing bank deposits, but like kind of offering some kind of complementary piece that expands the capacity for consumers and merchants to engage in transactions. So I think with that starting point, we start to think, all right, well, what does that look like? What does that mean? Is a central bank digital currency something fundamentally different, marginally different? than what we already have, and how do we think a little bit about that? So I think that's the starting point. The second thing, this kind of gets to these questions about, threats from, say, the likes of the People's Bank of China or some other types of economies, is thinking a little bit about, what is building out a central bank digital currency and the architecture that it exists. How do you think about that responsibly? How do you think about that from a legal structure point of view? How do you think a bit about it from a design element point of view? What is the architecture? Is it sound and robust? Because I think we have, as a key international currency, a responsibility to make sure that technology is safe, sound, and secure no matter what. So part of our innovation process is to understand a bit about how emerging technologies or technologies that could be used for central bank digital currencies ties to the elements of security, protection of data, consumer protections, the legal foundations, things of that nature. And so, we think both on the technology innovation front, but also on the policy and business side front. So we really try to attack it from a variety of dimensions. So technologically speaking, right, we have a couple of centers. You mentioned the Boston MIT collaboration, where they're kind of looking at this from a ground up type of architecture for a central bank digital currency that could accommodate a very scalable set of transactions. We're looking at the board in something called the Tech Lab, a little bit of a different approach where we think a little bit about having multiple types of systems and architectures and how would they interact, how would a central bank digital currency translate on that. So we're thinking a little on the technology side. We're trying to kind of be very agnostic to what it should be, but start to look at different approaches or different ways to see how things could be constructed. And that's just on the technology piece. Like I said, there are further questions that we have to. Yeah, sorry.
No, can I just to make sure that I intellectually am getting it, because this is really very useful, even for the law professor here. So the way in which you're kind of thinking it through is saying, all right, we're going to be technology neutral. The way in which this plays out, and we can get into a conversation about this soon, you can have lots of different sort of qualitative features. And we're just trying to see, to some extent, how we at the Fed board would be able to support everything from interoperability if we have multiple systems supporting some kind of, I guess, multiple CBDCs, or are you thinking, when you say that, do you have stable coins in the back of your head? I'm just trying to figure out how you would have, in the first place, multiple sort of CBDC, US, CBDCs that would be running outside of your infrastructure.
Yeah, I think it's helpful to think of two pieces to any central bank digital currency design. One is the qualities of, let's say, the digital instrument. What does it look like? And then the other is sort of the rails on which this instrument could be transferred. And there are different approaches to think about this. One is that there is an entire supporting architecture for a central bank digital currency that serves as the foundation. The other is sort of thinking a bit about, well, how do we use existing rails and platforms? So that could be fast payments rail, it could be card scheme rail, it could be other futuristic types of rails, and is the currency easily transferable across these types of platforms? So I think what we're trying to just better understand is what's the capacity, the capabilities, and limitations of different approaches, being agnostic to the outcome at this point in time. I think what we're just trying to understand are the trade-offs, because I think when you start to dive deeply into central bank digital currency exploration, you very quickly run into these kinds of trade-offs from design. And how do you build that trade-off that, again, sort of preserves the two-tiered structure of the financial system, which means, not disintermediating bank deposits, preserves the institution of physical cash and currency, but offers another path for transactions that might be of benefit to consumers. And so what does that look like, and how is that integrated into our current financial system? These are big, challenging questions, and we're only starting to scratch the surface on technology, but also on the policy side.
I'm sure I'll make it part of an exam and give my students 30 minutes to answer it and solve it. When you think about specifically, that design issue, part of it is the degree to which you think it best, and particularly when you think about the possibility of disintermediating commercial banking and bank deposits, and do you want to inadvertently upend how we view the path of money creation and the like. The private sector has an interest, to say the very least, particularly the private banking system has an interest in how this particular conversation plays out. And it's a conversation that not just your traditional banks, but all kinds, an entire swath of new kinds of financial intermediaries are taking an interest in. Ulrich, I mean, when you guys, particularly with the ECB now, really starting to dig into the question of a CBDC, how do you view that dialogue playing itself out, the conversation playing itself out? I mean, on the one hand, this is the province of the state, of the government, but the government and the state has, not even the central bank, has sort of monopolized money creation in a very long time. How do you go about structuring that dialogue with not just the private banking sector, but such a heterogeneity of financial players who could be participating in a new kind of digital infrastructure?
Yeah. No, those are really the questions we have to look into. I mean, all what David said was perfect. We have to explore how the rails and the front end can, have to be reinvented or not, and preferably they don't have to be reinvented, but we can rely there on the industry, on all the beautiful things the industry developed, and not, rebuild the world, because at the end we want to be efficient. So here, that's the first, I think, important message to the industry, that they should be part of the solution. And of course, as you say, the industry is very diverse, so we will have to see how to manage that. But client relationships, are with banks mainly, at least in Europe still. So there would be, a natural way to recycle those client relationships at the front end. And then the rails, the distribution mechanism, that's a very interesting one, where we are also at an early stage. As David was saying, we are still agnostic there on what the efficient solutions are. I mean, towards the banks, again, as David has said, we don't want to, take over their balance sheet. No, we don't want in the euro area that 10 trillion of deposits move into our balance sheet, because we are not, we don't want to become and show that we can be successful. But then, to make sure that we don't crowd out, that we don't balloon our balance sheet, we have to find ways to limit, maybe through pricing, maybe through remuneration, excessive inflows, if those would really happen. So, but we have to worry both about, making this a success, and then maybe making it not a too big success that we take over. But I would be confident that we can find the middle way that basically maintains the role of central bank money in society, maybe at the present level, more or less.
Well, I guess we'll sort of round out this conversation, sort of looking into the future, because obviously that's what we've all been trained to do, or not. But when you think about say a half decade from now, I mean, the pace of innovation is staggering in basically every pocket of the fintech ecosystem. Where do you think, and I'll start with you, David, and then I'll swoop back to Ulrich. But David, where do you think we'll be with respect to sort of central banks and having launched CBDC products? I mean, if you're going to make sort of an educated guess, do you think the Fed would have moved into that space Do you think it would move into that space because they're watching Ulrich perhaps and seeing some interesting things coming out of the ECB or things that they're hearing in terms of a rollout of in China with a digital yuan being used as part of the sort of digital Silk Road? Where do you think we'll be in a handful of years when we pick up this conversation? Obviously, hopefully we'll have more in between then, but 5 years from now, what are you anticipating?
So I think the level of maturity amongst the central banking community will obviously be advanced. Even in, just when we first started thinking about this, probably at least as early as 2016, 17, there was a sense that we were pretty far off. I think now we feel a little bit closer to understanding technologies and capabilities and challenges and questions a little bit better. And I do anticipate us understanding a bit more on that front. I would say that if you're to see early central bank digital currencies, there are probably going to be things that are very incremental to what you see today, and would ultimately kind of look closer to e-money or prepaid card types of elements that you might see related to but being a central bank liability as opposed to maybe a commercial bank or private liability. And so, thinking a little bit about that, that's a conjecture, but I feel like there's a sense in which that path is a little easier to see at present without understanding some of the broader capabilities and technology challenges that we'd have to face to do something a little bit more nuanced or more transformative. And so I think those are the kinds of things that we'd have to, in the next few years, start to appreciate a little bit more of. Will technology be advanced sufficiently? Will there be a clear path that leverages, as you mentioned, a lot of stakeholder engagement, that identifies not just the use case, but the technological and policy path that we could have, and appreciate, I think, a lot of what I think are still a lot of trade-offs when you really sit down and think about central bank digital currencies. There are a lot of questions that have to be sorted out. Technology is great in that it expands what's feasible to all of us. But we still then have to start to apply the various constraints, because once you try to meet two objectives that compete with each other, one's got to take precedence over the other. And how do you actually sort through that? And I think those sorts of mature conversations around central bank digital currencies what I expect to see more of in the next few years.
Ulrich, what do you think? I mean, once the Fed launches US coin, and is eating up this huge share of the global monetary system, is that a catalyst for you guys, or will it be something else?
Well, I see those central banks moving a bit in parallel. But there will be some, smaller guys or even very big guys like the Chinese who will move earlier, no? And I think that will inspire everyone, seeing, that it works, how it works. So I think that will accelerate things at the end, no? If you have a few guys out there who shows how it works, and it works, and they have, find the solutions, technological solutions, and even you have a menu, you have different countries having launched some CBDC payment solutions, then, I think it gets momentum and we will all jump on this train eventually.
Well, thank you to you both. I've learned a lot, it's a conversation that is certainly hard enough to be able to predict 2 or 3 weeks from now, much less 5 years from now. But I appreciate you both sort of chipping in and providing a lot of really important guidance and perspective. Thank you so much for your time.
Thank you, Chris.
Thank you.
Hi, everybody. My name is Craig Hewitt, and I am very excited today to partner with Ross Edwards to walk through how on-demand liquidity-powered payments are making a big difference in real-world experiences for people around the world. You're going to see, as a payments provider, how on-demand liquidity can allow you to offer real-time, fully transparent, lower-cost payments across RippleNet in ways that are just not possible in any other network today. And aside from a profoundly better customer experience to your customers, we're also introducing a line of credit that will allow you to elastically scale your business without having to worry about managing no-stro accounts and balances and pre-funding around the world. You can rely on Ripple to satisfy those needs. Now, if you're a consumer of retail remittance payments, you're sending or receiving them, well, you're going to see a payment experience that should exist for all payments today. And that is one that's intuitive and easy to use. So with that, Ross, I'll hand it over to you to walk through on-demand liquidity payments over RippleNet.
Thanks, Craig. In this example, we have Annette in the UK who's sending money to her mum, Rosa, in the Philippines. Annette uses FastRemit, and specifically their mobile app, because it's easy, she knows she's getting a great rate, and it's a payment experience she's come to expect. Initially, she'll enter the amount of funds she needs to be received in the Philippines, in this case, 5,000 pesos. She'll then select the recipient, which of course in this case will be Rosa, her mum. Based on these details, FastRemit will perform validation and screening to meet all of their regulatory obligations. FastRemit will then call a single RippleNet API service to obtain a quote from all the parties to the transaction. And these details from the quote will be provided back to Annette. As we can see, this provides complete transparency into the cost of the payment. You know the fees that you're going to charge, but RippleNet can guarantee a competitive FX rate based on real-time mid-market rates and best-in-market payout fees through partners such as Sprout Bank in the Philippines. Annette can see the specific cost that this payment could have through the app, and based on real-time settlement over on-demand liquidity and the payout capabilities in Philippines, shows that this payment will reach Rosa in under a minute. Based on this, she will proceed with the payment. FastRemit will obtain these payment information and provide it to all of the other parties through RippleNet. Sprout Bank will use this single view of the payment to validate and screen to meet their local regulatory obligations in the Philippines. Once these steps are complete, Sprout Bank will lock the terms and details of the payment, which informs FastRemit that it can be processed on an STP basis. At this stage, FastRemit will proceed with settlement, initially ensuring a net is debited, including any upfront declared fees, and calling a single RippleNet API service to proceed with settlement on the network. In this case, they're using on-demand liquidity, and this is based on an allocation of XRP that Ripple has provided FastRemit, forming a purchase of XRP at the point of settlement, based on the rates that have been agreed through the quote process. The XRP is transferred to the Filipino exchange through the XRP ledger, a process that takes about 3 seconds. Once the XRP is available at the Filipino exchange, it's sold for local currency, in this case, pesos. Both Sprout Bank and FastRemit are notified in real time that the funding based on the payment they previously agreed to has reached Sprout Bank. And based on this, they can make the last mile delivery of payment to Rosa's bank account. This can be an account at Sprout Bank, but it's more likely to be through a real-time bank clearing network like InstaPay, or to an alternative beneficiary network like digital wallets or cash payout networks that are also available through RippleNet. Once this step is complete, Sprout Bank will but to have certainty that her payments are received by Rosa and other people that need that money. That completes the payment experience for Annette and Rosa based on RippleNet and on-demand liquidity. Back to you, Craig.
Thank you, Ross. So what you just saw was an instantaneous cross-border payment that was fully transparent and cheaper than any alternative network. And what this means for our users, like Annette and Rosa, means more money in Rosa's pocket faster. That means a better quality of life. So using on-demand liquidity and RippleNet, now combined with line of credit, allows you to offer these kind of experiences around the world so you can focus on scaling your business with elastic on-demand capital from Ripple and delivering these kind of experiences to your customers. So to talk more about this line of credit, we'll hear from Barry to talk about the new feature on top of RippleNet, which is the line of credit. Thank you.
Thanks, Greg and Ross. Hello, everybody. Thanks for joining us at SWELL today. My name is Barry Joseph, and I'm leading the development of a new product offering here at Ripple. As you heard from Brad today, we're releasing a new product offering called Line of Credit. In this session, we want to give you an overview of that product. We really think that this is going to change the way you do business with Ripple and hopefully add a lot of value to our ongoing partnership. If you're just thinking about joining the Ripple network, we hope that this concept value so that you will continue doing business with Ripple for a long time into the future. Okay, so to begin with, I want to introduce you to Ripple's new lending product. RippleNet Lending is a blanket product offering in which we aim to help your business succeed and grow through unique methods that only Ripple can provide. Today, we're glad to introduce to you an initial product offering called Line of Credit. Line of Credit is a service that's available to RippleNet customers using on-demand liquidity. If you're in the previous session, you just got a step-by-step overview of on-demand liquidity. But if you missed it, I'm here to give you a quick refresh. On-demand liquidity is a service that Ripple launched almost 2 years ago today that allows for instant cross-border payments. When we launched our initial product, we introduced the use of the digital asset XRP, which acts as a bridge currency between sending and receiving fiat currencies. It's important that we provide the best possible solution to our customers to help them achieve scale and move into new markets. Over the past couple of years, we received valuable feedback around how we could improve this product. The biggest point of friction with our customers was that you still actually did have to pre-fund domestically, locking up valuable working capital. This added additional complexity and limited abilities to scale efficiently. To solve for this, we made some small changes that we believe will have a big impact. Today, we're utilizing crypto wallets to facilitate these cross-border transactions. To start, we enter into an agreement in which Ripple will sell you XRP. We deposit that XRP into your wallet at an agreed upon price. You can then use that XRP in your wallet to make payments across partners on our payment network. Payments are settled across the XRP ledger almost instantaneously, and then converted into local fiat currency by our partners to facilitate last mile delivery to the ultimate beneficiary. Since the price of XRP is agreed upon at the time of quote, Ripple holds all the volatility risk involved in price fluctuations with XRP. Once you agree to the price and XRP is transferred to your wallet, We'll send you an invoice that's payable within a few days. That's it. It's as simple as that. So now let's dig into the new offering. At Ripple, our goal is to make money move as fast and efficiently as information does today. To do so, we had to understand the problems many of our customers were facing. We heard from you about many of the inefficiencies and problems that arose from the existing payment networks and capital issues that came from that. Through your feedback, common issues kept coming up. Too much money is tied up in pre-funded accounts, and scaling is hard without large capital stores. Getting a loan takes a lot of time and distracts businesses from focusing on what they're good at. Many times, closing a traditional loan can take 2 to 3 months. Often, banks and traditional lenders want to perform a field audit, which requires extensive amounts of information, and even legal documentation can take a lot of time. Third, many of our clients have to enter multiple financing agreements to facilitate their global expansion, which is inefficient and distracting. Lastly, financing is expensive and cost prohibitive. Business loans typically average between 10 and 20%, but some can actually exceed triple digits through hidden fees and surcharges. To sum this up, scaling a business in the payment space is tough, capital intensive, and oftentimes comes at a high price. Taking all these problems into account, we found a creative solution to unlock capital tied up in cross-border payments networks and provide our clients with a custom solution that truly meets their business needs. With Ripple's line of credit, we can offer termed advances on XRP that are payable on a set schedule in the future. Our lending solution is fast, flexible, and affordable. We understand that business opportunities come and go quickly. That's why we move just as fast. With the use of our unique data sets and understanding of your business needs, we can approve credit in 24 to 48 hours. Just provide us with some basic information about your business and we'll get to work getting you an answer. It's so simple and transparent. Doing business in. Finally, we understand that business is constantly changing, and we heard that flexibility was important. Our offering is customized to suit your needs. Optimizing working capital is tricky. That's why we can work with you on the following things: the amount needed for the credit line, time to repayment or duration of the loan, and time between payment, commonly referred to as amortization. In summary, we believe getting access to credit should be simple and easy. Once you're approved, you'll have access to capital needed to grow your business fast and efficiently. Growth and expansion shouldn't be a problem that inhibits your success. But when it does, we want to provide you a solution that's easy to understand and affordable. RippleNet's line of credit is our first lending offering, and we're constantly looking for ways to add value. So stay tuned for future products and let us know your feedback along the way so we can continue to iterate and improve. Now time for Q&A. And if you can please ask your questions in the chat box, we'll be happy to answer them.
My name is Kirsten Rommel, and I work on the product marketing team here at Ripple. First and foremost, I want to thank our panelists for joining this discussion today. Really excited to have a conversation about the cross-border payment space, some trends that we're seeing within the industry. Also, each of these panelists will share some information about their experience with Ripple thus far. So before we get started, why don't we do a quick round of introductions? If each of the panelists could quickly provide an overview of the companies that they're from and what role they play within each of the organizations, that would be great. So Santiago from Bitso, why don't we start with you?
Sure. First of all, thanks for having us here. Excited about the conversation. So a little bit about myself. My name is Santiago Alvarado. I'm a civil engineer with an MBA degree. And for the past 3 or so years, I've been working in the fintech industry in LATAM. Before joining Bitso, I led the launch of a challenger bank in Latin America. And at Bitso, I joined to lead our cross-border efforts. So about Bitso, Bitso is a leading crypto exchange in Latin America. We have been in operations for 6 years now. We have a little over 1 million customers. Most of our volume is in Mexico right now, but we launched in Argentina in February and have become the leading exchange there. And we are working towards launching Brazil by year's end. Something that I think is special about Bitso is that our mission is to make crypto useful. So unlike most exchanges that focus exclusively on trading, we actually want to build use cases on top of this technology that don't depend on price or speculative trading, if you will. And cross-border payments are precisely a use case for that.
Great. Nicholas, let's go with you next.
Thanks for having me. Yeah, my name is Nicholas Steiger. I'm the co-founder and chief operating officer for FlashFX. We're an Australian Sydney-based international payments platform. We've been in operation for pretty much 3 or 4 years, and we've been, working with Ripple since the beginning. Our first proof of concept was a non-ledger Ripple solution. More recently, for the past year and a bit, we've been, officially on RippleNet, been using ODL, and growing our utilization of the various Ripple products and corridors we can build. FlashFX in itself, we're a consumer and business application for Australians who send money overseas, so cross-border payments. And more recently, we are also focusing more on B2B, meaning more wholesale payments. So we help Australian financial institutions who want to use our infrastructure platform to make international payments, partly using Ripple, partly not using Ripple, but then also helping overseas banks or non-bank financial institutions to help them distribute Australian dollars into the local market using the local rails. And that's been, quite an interesting journey for the past few years. So thanks for having me and looking forward to the conversation.
Great. Thank you. And Joel?
So Joel Kozlowski, I'm the CTO and CIO for Seagate, which is a cross-border international money transfer company based out of the US. Our primary focus is US outbound payments, but a little bit about Seagate. It's a 24-year-old company, and we're going through our third act. First there were fax machines, then there was global expansion and domination, and now we're into digital assets and cryptocurrencies. And I have been here for about a year, supporting the transformation to bring our B2B business onto the RippleNet network and to offer the world an opportunity to move money around as quickly as possible using RippleNet and our licenses around the US, around the globe.
So thank you for those introductions. Super helpful to have that context. So why don't we kick off the conversation by talking more about the cross-border payments space holistically? You are all experts in your field, and I'd love to get your thoughts on trends and opportunities within this space. So first question specifically is about how do you see the cross-border payments industry evolving over time? And really, where do you see the opportunities over the next 3 to 5 years?
Well, I'll go ahead and start. I mean, for us, our primary business is cash, out, the migrant workers sending money outbound. So for us in this environment, we're seeing cash start to go away. In the US, we don't take cash anymore. It has to all be digital. So that's rapidly accelerating the move of our traditional migrant workers using mobile phones, using mobile devices to transition into that new service, that new channel. that was very, very slow to adopt. We've been talking about cash going away for years for P2P payments. And it's just now picking up steam due to, the environment that we're in today. So for us, that's good. It's really making a big difference.
I'm curious if COVID has really accelerated that transition from cash to digital in your industry.
It has. What we're seeing is consumers are experimenting with less risky applications, in digital, going to the local fast food and paying, or the Starbucks type, program. And as they get comfortable using the digital, then they move on to more sophisticated, a little bit more risky transactions in the marketplace. And that's what we're seeing now. Is it took a little while for them to get used to it and experiment. But now as they're doing that, they're becoming much more comfortable. Higher dollar, payments, more frequent payments, and things of that nature.
Yeah, I'm just sort of interested to see, how the Ripple product has evolved over the years, and I think we're really excited to sort of keep, seeing that evolvement going forward with ODL and RippleNet, and I think having a greater acceptance among the non-bank and bank institutions of using a digital asset to move funds. I think that's sort of the key for me. In some respect, sort of the last 6 months, COVID sort of has slowed down certain things, or sort of seen the rolling out of new corridors or destinations. But on other things, are sort of talking from our own experience, that integrations have continued throughout. And even though some of the use cases with some of our B2B and wholesale partner have struggled, with some of their consumer payments or other SME, I think we'll get through, and those connections we're building and will come back, and flows will continue. And I think the evolvement will go in the pathway we're on with RippleNet and ODL, and challenging the status quo. So I'm just really excited, and I think given with SWELL and more central bank engagements and government, that we have more acceptance or an increased risk appetite. I think I've been on a panel last year as well, and sort of said that's what I'm looking forward to. And to a certain degree, it has improved, but I think it not to the extent that I was hoping for, a year later.
Completely agree with that, Nicola. For Bitso, as I mentioned before, something that's part of our mission is to make cryptocurrencies useful. And I think that the partnership that we have built and the infrastructure that we have built in partnership with Ripple have to a large extent proven that this can be an effective replacement to the traditional system to move funds across countries. So I think that's very exciting. I think that there's a ton of opportunity in disintermediation here, where the traditional cross-border payments industry or the back end of the industry has multiple counterparties, each adding fees on top of fees. They impede real-time clearing of funds. And I think that via this alternative infrastructure, we can actually have much more control over the end-to-end experience of payments, specifically for low-value, high-frequency transactions. So I think that where we are now is a good indicator that the future is promising, and we can open new corridors. At least I feel that's the case for Latin America.
Thank you for that context. Over the past year, there have been significant policy changes made by central banks across the world. For instance, in Mexico, PSPs now have the ability to tap into domestic rails directly for payouts. Also in the US, there have been some initiatives around real-time payments that have been really exciting. Curious to understand if changes by the central bank have influenced or impacted your business at all.
So for us, it's a problem, right? Because with the central banks, they're basically implementing standards, and making things easier. The traditional P2P, the Western Unions, the MoneyGrams, the Sigas of the world, we had a lock on those small payments, high frequency payments. Everything was great. You could make a lot of money. but now with and manage the risk, right? But now with the banks setting up the open APIs and all of that, and just making it easier, the increased competition as soon as they catch up, they're going to have to keep us on our toes. So that's a little bit scary. But on the other side, with them opening up and becoming more friendly to the crypto assets, that makes it easier for us because we no longer have to pre-fund the accounts. Using ODL is going to make our lives much, much easier, and we're going to be able to grow faster and capture more of the market because we won't have all of that capital tied up in foreign bank accounts. So that's where I see kind of the trade-offs.
For the Australian market, some of you might know that there is NPP, the new payments platform, which was introduced, I think, a bit more than 2 years, and it's working well for our, consumer and business clients to pay us. So it's pretty much real time where we can receive and process the funds, then to make international payments. We've seen a number of banks and other competitors, including us, using NPP as well for local distribution of international payments. The change that we've seen there is that NPP Australia started to restrict those payments because they wanted to have a system ready and have all the banks integrate, that we can enrich the data that is going to the actual recipient bank of the recipients of any income international payments. So what it meant, for us, the big restriction is that the real-time distribution into Australia is sort of slowing down a bit, just because not all the banks, are ready to use that. So if you sort of go back to the old world, it's pretty much sending through an MT103, that sort of message that you send that through the recipient bank, so they can see this is not just a local transfer, but it's actually coming from overseas. So that has sort of slowed down and put a bit of cap on the growth of that. But nevertheless, we still have increasing demand to improve the settlement offered by other banks, etc., to distribute the funds. And we're the only one in Australia on RippleNet that can do that. So I think that's a good focus, and those changes will come through. So they put a bit of damper on our ability to make real-time payments into Australia, but that will change again, hopefully very soon.
Perhaps bit of perspective, and that's the perspective of our crypto exchange, is a bit different, and we feel that, or at least regulations from central banks so far, I would say, has had a positive impact on our business, in the sense that they have given us a lot of clarity on how to conduct KYC processes, AML procedures, aspects of our operation that we wanted to get regulated can now be regulated, which is a really good thing. When we are talking to bank partners, we can now talk their language, right? We can understand what they are afraid of, what risks they want to mitigate. So it has really opened up doors for crypto exchanges, I believe. And not only with banking partners, also with large institutional customers that feel much more comfortable becoming our customers now, as we are fully regulated.
So interesting to get everyone's point of view. We have a variety of companies participating on the panel today, and as you can see, each company really operates within a unique segment of the cross-border payment space. So shifting gears a bit, but still staying within the vein of industry trends and opportunities, I want to talk about mergers and acquisitions within cross-border payments. So last year, we saw a large amount of M&A activity within the industry. For instance, WorldRemit acquired SendWave, Visa acquired Earthport, MasterCard acquired Transfast. The list goes on and on. So from an overarching trends perspective, do you see the industry consolidating further? And if so, what does that mean for your business specifically?
So for our business, those consolidations have been kind of good because those companies have divested their cash arm, right? The cash inside of the business on some of those. So we're able to pick that up and increase market share, and all of that is wonderful. On the downside, we also have the payer network, that's pushing money into the local rails and things of that nature. There, the competition is going to heat up because those companies are much larger than Seagate and our firm. So on the payout side and distribution side, I think the competition is going to be very, very rough. And on the origination side, we're able to pick up the risky arm of the business that no one wants to touch, which is the cash. And then in the middle, you have the ODL, which hopefully gives us a competitive advantage, so we don't have to move money around, because we all know how Visa and MasterCard move money, right? It's still through the traditional networks. So maybe there's opportunities there for us to keep our costs down and still be attractive.
Yeah, look, I think it's to a certain degree positive. As you say, Visa, MasterCard, and many other organizations still operate in a more traditional way, and just having that, it doesn't mean that has changed anything, or their infrastructure is probably still archaic, and I think there's still an opportunity, even as a relatively smaller player compared to them, to make a difference and be a more nimble operator in picking up that more innovative ways in moving funds across. Look, I think it's just an evolution of the markets. For me, I think it's good, but I'm focused really on the utility and making it work for us, increasing our network, the origination as well, connecting with other wholesale partners. That's really where we are and where we want to make a difference. And yeah, sort of I'm not getting too much sidetrack on those deals.
Yeah, I think I agree with that. In general terms, it's positive in the sense that it makes the industry more dynamic. There's probably more available capital for up and coming companies in the industry. But I would say that same as FlashFX at Bitso, we're mostly focusing on growing our network organically and in geographical expansion.
We've touched on this briefly already, but want to talk more about digital assets. Several of you have already integrated digital assets into your payments flow via ODL. For those who have done so, what are your thoughts on the adoption of digital assets by the industry as a whole? So Nicholas from FlashFX, let's start with you.
Look, I think it will take time. It's people sort of need to understand what it is and how it's used in the context of ODL, and people just hear digital asset or XRP and feel there is risk attached to it. But I think that's sort of short-sighted, and one has to look more at the utility. What can I achieve? How the operational costs can be reduced, and Joel mentioned before about the pre-funding aspect. I think these are the right ones to pick up on and make a difference compared to how current operators have their pre-funding in the various banks. So I think it just takes time. It needs a lot of conversation. It needs panels like this. There's many employees now at Ripple, speaking to a number of financial institutions, explaining the difference, to sort of just get the knowledge base to a higher level than it currently is. I think that's same as with the government agencies and central banks. And I think we're on the right path. And sometimes it's faster, sometimes that slows down due to external pressures that we currently face. It's not going to happen overnight for us. I think what we're looking for is continued expansions, opening up of new ODL destinations that we can connect into. Equally for us being more open to receive ODL transfers for the local distributions. So I think we're on the right path.
I couldn't agree more. I think that the conversation should be really focused about what crypto can bring to the space, right? And what's the utility of this technology. And I believe that we have started to achieve a level of maturity using cryptocurrencies in cross-border payments where we can really scale up that utility, right? And we can target mass market or a larger chunk of market share for cross-border payments, right? Specifically for Bitso, so Bitso's role here is mainly to provide liquidity, right? Liquidity against local currencies. So whenever XRP via ODL gets into Mexico, we have to sell that for Mexican pesos and pay that out to local bank accounts or via cash payout networks. And I believe that we have gotten to a place where we can really tap into the benefits about the technology, right? Which is instant clearing of funds, 24/7 operations, which really reduces pre-funding requirements or working capital requirements for senders, really competitive FX rates, and actually, to quote Brad, Ripple's CEO, liquidity begets liquidity, right? So as we get more volume into Mexico, we actually benefit traders because they get better prices, and then volume from traders benefit cross-border volume, they get lower FX rates. And I think we're going to continue to get more utility out of the system. And as Nicholas mentioned, I think there should be a lot more conversations, panels like this, approaching regulators across the region. And I think we'll start to see that this will become more mainstream in the following years.
Yeah, for in a previous life, having ODL and Ripple allows a startup to do cross-border payments fairly easily if you can fill out paperwork properly with the regulator. I mean, we were able to launch a new brand, US to the Philippines, through RippleNet, in under 6 months, 0 to 100 really quick, because we didn't have to deal with the liquidity. Everything ODL made it very, very smooth, and everyone was worried about the regulators. And then you say, don't worry about what's behind the scenes. It starts out in cash, it ends in cash. What I turn it into, ones and zeros, it's the same thing going through the Fedwire system or some international wire system on SWIFT. It all turns into ones and zeros. No one's shipping a pallet of money anymore, right? So once we explain that to the regulator, oh, okay, yeah, check the box, and they let us launch. For me, it's an amazing opportunity for startups, to go and do something different and innovative, having those rails there.
Okay, I want to shift the focus of the conversation to each of your experiences with Ripple specifically. What originally compelled you to work with Ripple, and what are you hoping to get out of the relationship moving forward? Joel from Seagate, I know it's still early days in terms of your integration with Ripple, but want to understand your hopes and aspirations for the partnership moving forward.
This is my second pass at Ripple. So first I started on the origination side, and then now we're doing the payout side. And what brought us here is, again, the on-demand liquidity, the opportunity to take our vast network throughout the globe and open it up to a whole new market, right? There's a lot of hesitation because of the regulators, and we're going through our third act. So this is going to be an amazing third act. We get to be, out and be a leader in bringing cash into the US and then leveraging that network. Ripple's creating a safe environment for us, with the rule book and the playbooks that they've provided that you don't necessarily get if you try to do this any other way, right? Because people are afraid of money laundering and things like that. And Ripple provides that safe network that's kind of been vetted, and it's full of regulated entities where you don't have a lot of costs vetting, the people that you're going to be doing business with, because it's kind of been pre-vetted as a part of RippleNet, on top of the ODL and all of those other wonderful things. So that's what attracted us.
Yeah, look, we've, as I originally said, we've been engaging with Ripple for a long time, a number of years, at very different levels, and I think we're sort of on the path ourselves, from being a startup, from using new technology to see how it works, experiments, improve our system, help with feedback and making the products, better, because we believe in, RippleNet and an ODL. And I think it's just, same with the utilization of the digital asset, the XRP. It's a pathway, and we've always have enjoyed the partnership, the engagements, the feedback, both ways, to really improve, your product, our products, and we sort of continue to build on that trust that we've built over the years.
I guess our experience with Ripple is a bit different from the ones you've had, in the sense that we are not a customer, right? We're part of the infrastructure for ODL. So in that sense, I think, as I mentioned earlier, what's most exciting for us is that we really are making crypto useful with this. And I guess the process of getting to where we are, where we at some point got to process a little over 7% of all the remittance flows from US to Mexico, which is the largest remittance corridor in the world. I think that's great indication that this is here to stay.
Yeah.
So we have really enjoyed the process of building this with Ripple.
That's a great stat there. I love that stat. All right, so we are almost out of time. I'm going to ask one last question before we end this discussion. Any thoughts on areas of innovation or focus for Ripple moving forward? Anything you want us to double down on from a product perspective? I would love to get your ideas on places you think we should invest in moving forward.
The Ripple product is pretty solid. Everyone likes better back office screens and reports, right? So, but I think that for Seagate wants to be a part of that infrastructure, right? That's what we need, is just more partners willing to do the cash out, access to the local rails, things of that nature. That's probably where I would like to see most of the growth and the opportunity. I mean, as far as innovation goes, I mean, already on the bleeding edge, right? With the ODL exchanges, there's solving one problem at a time and mastering that solution.
Yeah.
I think is where the value is, though.
Mm-hmm.
Look, I think we're on the right path. For us, more ODL utilization, more corridors, destinations we can reach. I'm not sure what the current number of financial institutions on RippleNet are. 300, 350, maybe more. Anyone who seeks to connect to Australian partner for payout capabilities, just reach out to us and have that engagement. For the time being, we're the only one in Australia that can do that. We already do get the support, and we sort of continue to build on that path. So I think we're in the right hands, the right setup, and looking forward to next year.
Yeah, likewise. I think there's if there's something I think prioritize is scaling or opening up new corridors, continue to open up new payout options, so that a sender anywhere in the world can really tap into whatever payout option they want into whichever corridor. I think there's a ton of value in that network effect. And the other thing I would say, in order to continue to scale up volume and value proposition, is to start to build outflows or backflows, right? For instance, if we're only getting volume into Mexico and not volume out, we will need to continue to source more liquidity, right? And I think there's a ton of opportunity in that space, and I think that's something we should be focusing on the next few years.
Mm-hmm.
I want to thank all the panel participants for joining this discussion today. I think the conversation will be really interesting for our SWELL attendees this year. I also want to thank each of you for your partnership with Ripple. We are very, very excited about the journey ahead as we continue to innovate and build products leveraging both blockchain and digital assets. So thank you very much.
It was a pleasure. Thank you for the invitation.
Yes, thank you for the invitation. It was a pleasure.
Welcome back to the third annual Blockchain Innovation Awards. Let's take a look at a second award category of the day. The Network Accelerator Award is given to top customers who are propelling into new and existing markets and exemplify rapid product adoption. In this category, we have two highly deserving winners. The first award goes to D-Money. D-Money and Ripple are like-minded institutions with a common goal of making payments fast and affordable for everyone. D-Money has demonstrated exceptional capability to quickly connect with senders on RippleNet and deliver first-class service to partners from all over the world. Similar to Ripple, D-Money believes in the role of digital assets in democratizing payments. And to that effect, D-Money is Ripple's first on-demand liquidity partner in Thailand. Our second winner in this category is Banco Rendimento. Banco Rendimento is a market leader in cross-border transactions, is looking to take advantage of the network innovation supported by Ripple. So using RippleNet on cloud, Banco Rendimento provides their customers with more visibility, transparency, and standardization than their competitors, and also enables customers to reduce manual processes such as reconciliation and checks normally associated with cross-border payments. Congratulations, D-Money and Banco Rendimento. That's all we have time for today's programming, but we hope you'll be able to stick around and network with other attendees and participants in our virtual interactive sessions. And I'll see you tomorrow when I'll announce more of our remaining winners.